Hello there, how are you today? Let's talk about 7 biggest Bitcoin myths that are running around the netizens. With Bitcoin reaching new all-time highs and major news breaking virtually every day, it seemed like a good moment to examine some of the most common misconceptions and myths that still exist about the world's first cryptocurrency. Let's determine whether they are true. If you or your uncle believes, for example, that Bitcoin's value is based on nothing or that it is too volatile to be useful in the real world, then this video is for both of you, or well, probably just your uncle. Myth number 1. Bitcoin is a bubble. While some people purchase Bitcoin as a speculative investment with high returns, this does not imply that Bitcoin is a bubble. Economic cycles characterized by unsustainable increases in market value are known as bubble. When investors understand that prices are significantly greater than an asset's inherent value, they finally pop. Well, you can't blame people for being too careful, right? In recent past itself, we have had 2 of the biggest bubbles in the US alone. The dot-com bubble in the 90s and housing bubble that peaked in the year 2006. In fact, at the end of the dot-com era in the 90s, Amazon stock nosedived from around $100 to just $5, only to become one of the most valuable companies in the world in the subsequent decades. Let's move on to myth number 2. Bitcoin has no real-world uses. Critics prefer to say that Bitcoin isn't helpful in the real world, or that if it is, it's only for illegal activities. Well, neither of these assertions is correct. Bitcoin has a long history of being used to send money to anybody in the world without the need for a bank or payment processor. And huge institutions are increasingly using it as a gold-like inflation hedge. Much like gold, Bitcoin is scarce. There will never be more than 21 million Bitcoins. Gold, of course, is heavy, bulky, and difficult to transport and store. Bitcoin, on the other hand, can be sent digitally as easily as sending an email. Like any form of money, some of it will be misused, but well, compared to US dollars, illicit use of Bitcoin is a drop in the bucket. And now with countries coming forward making Bitcoin as legal tender like El Salvador and now Cuba, we are looking at a turning point in the economics of the world as a whole. Let's move to myth number 3. Bitcoin doesn't have a real value. Bitcoin, like the US dollar and practically every other modern fiat money, is not backed by a physical asset like gold. Bitcoin is designed to be scarce from the start, making it resistant to inflation. When enormous quantities of fiat currencies are generated, inflation can occur, diluting the current supply. There will only ever be 21 million Bitcoins. This scarcity is a major driver of its value. This helps ensure that supply is always reducing, which by the basic economic principle of scarcity has worked to keep the price of Bitcoin broadly trending upward over the long term, from less than a penny at the start to more than $50,000 as of mid-February 2021. The next myth: Bitcoin will just be replaced by a competitor. The first truly successful digital currency was Bitcoin. New cryptocurrencies have often promised to overcome Bitcoin through new features or other benefits, but none have come even close. Though thousands of rival cryptocurrencies have been created over the past decade, Bitcoin has always been and remains the most valuable cryptocurrency by market cap by a significant margin. It is also the most popular, making up around 60% of the crypto market. Reasons include, well, Bitcoin's first mover advantage, along with the purity of its mission as a decentralized and open currency, to name a few. Myth number 5. Investing in Bitcoin is gambling. While it's true that Bitcoin has experienced significant price volatility over the last decade, that's to be expected of a young and growing market. Since Bitcoin's genesis block in 2010, it has steadily gained long-term value, with a market cap exceeding $1 trillion as of February 2021. And as Bitcoin has continued to mature, a robust regulatory structure in countries around the world has helped to attract a wave of institutional investment like Tesla or hedge funds. Myth number 6 is Bitcoin isn't secure. Bitcoin network has never been hacked. It's open source and scrutinized by countless security experts and computer scientists. Bitcoin was also the first digital currency to solve the double spend problem, making trustless peer-to-peer currencies a reality. Further, all Bitcoin transactions are irreversible. A vast amount of computing power secures the network, and the miners that power the network are distributed throughout the world with nodes in 100 countries, which means there are no single point of failure. The last myth, number 7, Bitcoin is bad for the environment. Bitcoin mining does consume a lot of electricity. However, calculating the environmental impact is a little difficult in this case. Well, for one thing, the digital economy necessitates the use of energy in all aspects. Consider the entire global banking system, including all of the energy used to handle bank transactions and power office buildings, ATMs, local branches, and so many other facilities. In fact, a significant portion of Bitcoin mining is powered by renewable energy resources, including wind, hydro, and solar. The actual number ranges from 20% to more than 70% according to Cambridge Bitcoin Electricity Consumption Index. So these are the 7 myths of Bitcoin as promised. Let us know in the comments which one is your favorite, and if you know of any other myths about the cryptocurrency. Like, share and subscribe. Thanks for watching. Have a great day.